Is your client properly covered? Does your client have an off-the-shelf generic product or a finely tuned manuscript policy to meet their specific exposures? Does the policy adequately address any actual or alleged regulatory claims? Does your client understand M&A allegations and products that can insure those exposures, such as reps and warranty insurance or tax liability insurance? What are the appropriate limits for the risk? What is the best way to handle the claims process and claims management, claims scenarios, conflict of interest? A real estate syndicator, who's also the general partner for a number of special purpose entities, holds long-term investments in multifamily real estate assets. The GP has affiliated companies which provide a variety of services such as property management, maintenance to the multifamily assets. Investors in the multifamily assets sue the GP and affiliated entities alleging there's conflict of interest, questioning the fees that have affiliated companies that were charging for their services, and claiming they're excessive compared to the standard marketplace. Solution is the E&O section of the D&O E&O policy would respond, provide defense costs, misrepresentation. An investor in an industrial space wants to return of capital he invested from the managing facility. However, the managing member of the facility declines to return the money. The PPM clearly states that it's tied up for a minimum of 3 years. The investor sues the managing member, alleging misrepresentation during the process of inducing the investor. The D&O section of the combined would respond. So misrepresentation is D&O. Investment loss. A real estate firm solicits $50 million and purchases land for development. When it finally decides to develop, interest rates have increased to the point where the project cannot compensate for the additional funds needed. As a result, the real estate firm has to sell a property at a steep discount. They did not have adequate capital to hold onto the asset. Investors sue, and loss and defense costs exceed $5 million. Both the D&O and E&O insurance. So that's investment loss. D&O and E&O. Due to tribute, lack of due diligence. A real estate firm syndicator is seeking to buy an old movie theater.